The dollar is gradually regaining ground it lost earlier. At the same time, the US dollar index is likely to hit its highs. And the point is that during his recent statement, Fed's chief Jerome Powell made ambiguous hints about the prospects of a change in the interest rate. And today, markets await his next speech, and investors want to receive clear signals. In addition, investors returned to buying the US dollar after a batch of big data on the state of the European and the British economies. In the United States, the economy performs much better, so market participants began to assess the attractiveness of investment based on macroeconomic reports. Today, we will discuss important reports that will be released this week and how they may shape investor sentiment. Investors will once again assess reports on the Chinese economy to gauge the outlook for the global economy. While at the beginning of the week we followed the trade balance report, now the focus is on the inflation data. The forecast is extremely negative. Consumer prices are expected to fall by 0.1%, signaling the still sluggish state of the Chinese economy and increasing the risk of a global recession. In such economic conditions, markets will likely stick to risk aversion. Investors will prefer to buy safe haven assets. The Australian dollar is likely to come under pressure as the risk barometer for the Asia-Pacific session. As is the case every Thursday, investors will receive news on the number of unemployment claims. Recent data points to a softening in the US labor market, which may convince Fed officials to refrain from rate hikes. On Thursday, apart from the unemployment claims report, investors will rely on the speech of a Fed head, Jerome Powell, in assessing the US monetary policy. It will be his second speech this week, and this time his statements may have a different tone. Investors may have not received any signals on Wednesday evening. On Thursday, they will certainly get some clear hints. On a Friday, the markets will turn their attention to the British economy. The pound has been getting sold off recently, and the pound-dollar pair can only rise in those rare cases when the US dollar is weak. And this week, the US currency is recovering, which is not in favor of the British currency. The decline may be reinforced by Friday's data on the UK GDP. It's expected to show a contraction of 0.1%, and this is already a sign of an approaching recession. Notably, a recession occurs when the growth rate is below zero for 2 consecutive quarters. Thus, the British pound is unlikely to regain the attention of investors. The trading week will end with the release of the Consumer Sentiment Index from the University of Michigan. This report is not important, but it characterized the most important segment of the US economy, which is consumption. Therefore, in the absence of other drivers, the content of this publication can have a significant impact on markets. We will monitor the market reaction to the above-mentioned reports, subscribe to our channel, and follow changes in market sentiment with us. Any comments, questions, and offers are welcomed. We wish you profitable trading and see you soon!